GKFX Prime presents the Market Analysis Webinar.
Hello traders, welcome back everyone. Thank you for joining me. My name is Dima. Another weekly analysis video here in the markets. We've got NFP behind us. We have the new quarter which has started, and let's see where we go towards the end of this year. I'm going to cover a few charts this week, which will be very similar to last week, in fact, because it will be a continuation of what we looked at. So it should be an interesting one. We can see the markets developing now, setting some kind of tone, and there's a bit more clarity. We've got this week a few calendar events to look out for. Monday could be a quiet day. We've got a few bank holidays across a few countries and economies. Tuesday, we've got the speech from Switzerland and the SNB. We've got the pound speech as well from the Bank of England there. On the pound, Wednesday, things get a little bit more interesting. We've got GDP news from the pound and PPI news from the dollar, but the two main events will be the speech from the European Central Bank that's linked to the euro, and the FOMC on the afternoon of New York time on the dollar there. So Thursday, we've also got another dollar news, CPI, that could have a potential inject a bit of volatility into the market. And on Friday, ending with lesser important USD news, or perhaps lesser effect, I should say, retail sales and consumer sentiment. So a few bits of news to bear in mind here. I've just starred the ones that might be worth paying more attention to there. So let's have a look at the developing charts and see what we can find in terms of opportunities. Right, let's start with the big ones as usual. I'm going to start with the euro dollar. Have a look on the weekly, and I can see here that what happened, we are now in a very long-term downtrend. We have had 2 weeks ago a bullish momentum here, and then that turned bearish once again. So with that continued possible bearishness, at the same time bearing in mind that we are heavily sold off here, we are very heavily weak and cheap in terms of price on the euro dollar. So this may not be a very long-term trend. We may need to be a bit more flexible and nimble here. It may not be could be a short-term trade. That's what I'm saying. So let's go to the 4 hour and have a look here. Okay, so here was that high of the last week, and we may now look for a continuation to the downside. And if that continuation does take place, then I'll be looking for a retracement and then a continuation to the downside from that better price. However, there's also a second scenario, which is because we are very heavily sold off here, we may see a reversal. The market may turn, and we've got to account for that possibility. So the other possibility I'll be looking at is this area down here. And if we head straight for that and then see a reversal from there, this could be another possibility. So because of this slight uncertainty, or I should say not as high a probability as you'd usually like, this is not the best trade of this week, I would say, in terms of if I had to pick one and you were going to ask me which one would be the most interesting one. Now, these scenarios are just possible scenarios, and we're going to have to see how the price action takes place, and when we see a very clear continuation or a reversal, it will all depend. We can also have gaps in the market as well, remember that. So that's worth bearing in mind, because you don't want to be rushing if you expect the volatility to kick in, or gaps to take place, or some unknowns to happen. it may be worthwhile with the news that you've just seen with the calendar to wait until about Wednesday, Thursday to see how it actually pans out. Okay, so that's the euro there. We'll be monitoring that. I think throughout the week would be best to have a look at. It may be also worth to take this trade on a lower time frame basis. You could go to the 1 hour or further down. It depends on the way that you play your approach. And with that, take a smaller trade or take a piece out of this move here, which is about 100, 150 pips. And after that, when the market becomes even cheaper, then the uncertainty increases. So that's a little side note disclaimer, and something that's really worth bearing in mind. Before I continue to the next one, I'm going to go to pound Aussie, but I'm just going to have a quick look at euro Aussie, which is what we were looking at last week. And I was paying attention to this area, which we went through, but did not breach the low, invalidation low. So the market did push higher, and we're now making that move. After having made that move, if you missed out, then I would say stay out, because it's now become an uncertain place to trade at once that move was done. So I'm just going to close that one for now on the euro Aussie, and I will go to the pound Aussie. And the reason I'm going to the pound Aussie is because we have still, looking at the weekly, we have still not reached the target area that I was looking at last week. So I'm watching for a continuation of that to continue to the upside after last week's close. Going to the 4 hour, here was that area where I was looking for the market to bounce from, and it did that and moved higher. And now it came back down and created a almost like a neutral doji candle on the weekly. So what next from here? Looking to go higher to the next area. From here, I would wait to see what happens and then pay attention to where the cheap price would be based on where the market is taken. Remembering that we have pound news this week. So the two scenarios that I'm looking at is still this area right here. So possible cheaper price to come down and continue to the upside. I'll now delete previous week's ideas. And now if the market does the opposite and move straight up, straight higher into the level that I'm looking at, then obviously there'll be no trade and it will not be a higher probability scenario anymore. But I would really favor a much lower price before looking to buy. That would create better, higher probability and higher risk to reward scenario, which is always what you want, to minimize your risk and increase your reward. Okay, that's pound Aussie. Next, let's go to another pound pair, bearing in mind that we don't want to be trading two at the same time. We've got pound Swiss. Pound Swiss, the reason I'm coming back to this, if you look at the weekly, we were looking for a better price on the pound Swiss to continue to the upside. Now, coming down to the 4 hour, we did hit that first level, and now we are getting a kind of a retracement coming down to a cheaper price. Now, the week didn't close very bullish, so I'll be looking for the same thing as I did last week, a push down into a cheaper price, possibly in this zone, and then continuation higher, which would be a nice few hundred pips to reach that high of significance. Of course, we'll have to see how the price action bears out here, how it reverses, if it makes a reversal and a push to the upside before making that decision. But a nice cheap price is always a good thing. So let me just mark it out here. So I'll remove this one to avoid confusion, and let's just mark this area like so. If I take a Fibonacci from the low to the high, we can see that below the 50 level here, this coincides with the 61.8 and lower. So that would be a nice favorable area to look for price to make a reversal and to pay attention to what's going on here. And this will be the next target as we looked for last week. But we've got this break of this structural high here, so more bullishness in the market is expected on the pound Swiss here. Okay, I'll move now to the next one. Let's go for gold. I'm going for gold. Okay, so here's last week on gold bullishness. We have bullish gold, a bullish close the previous week. So we have an indication, a hint that we may be seeing some more bullishness in the market. However, we are still in a downtrend, and the end of the downtrend or confirmation of a reversal will be at this significant level if we break that. So how do we approach this one? Are we bullish or are we bearish? Well, considering the force of this move of these recent days, I would say that we have more bullishness in the market, possibility of more bullishness, however not confirmed until this swing, as I was saying. But because of the momentum of this move, I wouldn't be surprised to see further upside. Now, going to still consider the possibility that we are going to go lower. So I have to bear that in mind, and let's account for that as we look at the possible scenarios here. Now, last week I was looking at this scenario if the market pushed to the upside, and it did. However, it didn't come back down into the cheaper price, into the level. It did make a small retracement here and then broke down. So this one is invalid. Not going to look at that anymore. And now I am going to resume the idea I had last week, which is a retracement lower and then the upside. So two things I see here. One is this possible area here, which would be a very nice cheap price if we're going to continue to the upside. And I also see a nice big gap, an area right here where the market can reach into before heading higher. So those are the two scenarios to the buy side. Now, the sell idea would be a bit more tricky because we would have to see more price action. So at the moment, there isn't anything clear that would indicate that. What would really have to happen is we'd have to see some very, very bearish price action down to here. And if we reach this level and we continue to blast beyond, to drop tank right beyond this level, then I would be looking to the downside and a further break to the lows, beyond the lows and beyond the low from 2 weeks ago. So far, because of this bullish momentum, I don't want to be going against it and necessarily fighting with what's going on in terms of what we're seeing here. Therefore, I'm not going to be really in a hurry. So again, not the best pair, or not the best chart to pick this week, I would say, because of this slight non-clarity, a little bit of haziness, and we really want to go for the best ones. So it's a similar case to the euro from that sense. Let's see how it plays out, whether we do get those interesting reversals, and if the market does push higher and indicate its direction. So I would favor that buy scenario, and let's see if that actually plays out. If not, be prepared to sit on the sidelines and wait for another week before actually making a decision on gold here. Okay, let's go to the next one. Let's go with S&P. Okay, so we have had bearishness, extreme sell side bias on the S&P for a while now, haven't we? So I'm going to look to continue that momentum, continue that downside idea. We could see last week we had this close on a bearish candle with this big wick. So it moved higher, took out the high of last week and moved to the downside, which is really what we expected. That's what we were looking at anyway. And now we've got this swing that's formed, and I will be looking for continuation of that. So what's the continuation? Well, a retracement to a better price, and then a continuation into the next low, which would be down here. So we took out the low of this swing, which was a significant low. Now looking to go lower, we broke that low, and we've got this next low and this next low as a possible target. Now that we have sold off last week, I would like to see a much nicer price, and not really expecting the market to breach beyond this high right here. If it does, then the whole idea here is invalidated, and we are going to have to reassess what's happening in the market. I'm seeing this as a big fake move because the overall pressure is to the downside. The overall idea is to sell. Right, that's the S&P here. Next, let me move on to oil. And again, oil was another one that we've been following for a while, and you can see this markup from the previous week. If you were with me, you would have probably remembered this. The week before we had this doji candle, and now this week we had massive buying happening, and the market has made its change of momentum, change of direction. And I did mention that if we see a break of this high, then the bullishness will be the favored idea, which we did have right there. So let me just remove this Fibonacci for clarity, zoom in again, and here were the scenarios that I was looking at: a push higher and then a retracement to buy, or a push lower and a retracement to sell. Now that we've moved to the upside, then we can see that we are in a buy scenario. So now that we've shifted into that bias, what are we going to look for next? Well, obviously we're going to look for a better price to see where we can look for an entry. The zone I see developing is here. That's one possibility. So if I'm going to look for a retracement, then I would like to favor a much cheaper price to continue to the upside. There's also a possibility for a shallower retracement, which would be here, depending on the price action. If that happens, if we get a reversal, if the market shows its intended direction. There's one more thing to bear in mind on this chart. I'm just going to point it out to you here, is this gap. So gaps tend to be filled most of the time in the market, although not all the time. Most of the time it's just usually a case of not if, but when. So the third scenario, if we breach this level right here, and if the market moves lower, and it doesn't mean that we are actually heading low. It means that we are going to dip down into a much deeper retracement before the possible move higher. So we're going to have to wait and see what happens. Is that the case, or will we actually move higher, or will we move higher from here? Now, these are 3 levels. It creates a little bit of uncertainty because we don't know, and I'm not able to tell, of course, predict what the market is going to do. We'll just have to see how it actually does it. The highest probability, or the best possible price, would obviously be the cheapest price that you see down here. But I'm not going to discount, excuse the pun, discount the fact that if there's a reversal here or on the level lower down here, that means there's not a trade. It could be, it still will be valid. So let's see how that happens and if it plays out on one of these levels. And we just have to monitor, and then once the price action is confirmed, we've got nice momentum resuming into the market, and we can see that the upside is still favorable, and we can jump back on that. Okay, that's the idea on oil, favoring the buy scenario. Lastly, as we did before, coming back to Bitcoin. We looked at this zone last week with Bitcoin for the market to reach higher before its drop. However, it didn't quite reach over there, and we did continue on that drop. So what next from here? What does that mean? What does that mean? Well, 2 things. Either we need to wait a little bit longer, or we may have a different scenario developing here. And if that different scenario happens, then we need to be flexible. Now, what does that look like? What are we going to wait for? Well, the obvious one would be moving higher as planned last week, no trade this week, moving higher, and then the drop, continuing the favored sell scenario. Or if that doesn't happen and we continue to drop from where we are at the moment, then what I'll be looking for is a break of the lows. And a break of the low would indicate further downside momentum. We also have this, it's kind of a trend line here, so that would be broken as well. So if that happens and we have a breakdown, then a breakdown lower, then getting a bit of price, pull back as usual, you know the drill, moving lower from there would be the interesting scenario in terms of probabilities. Let me just look back on the lower time frame, and we can draw out a minor zone over here, so we may pay attention to what happens there if we get that breakdown. Now, if the price doesn't breach this level, then I'll be just waiting for the original scenario, which is this zone up here, to see what happens, and then the breakdown from there, depending on the price action again, and for the market to reveal its hand when it does so and when it wants to. It may require a bit of patience. You can see there's a lot of accumulation here. 1, 2, 3, almost 4 weeks of consolidation, ranging market. So this will require more patience, and as ever, most of the time in trading, it's sitting on your hands. So let's have to do a bit more of that this week. That's how it's going to play out. That's how it is. It is what it is. We'll have to submit to the indication of the market and where it leads. Right then, those are the charts for this week. Here are your 7 for the week. Pay attention to the news, the economic calendar. The week may be starting slow with the bank holidays, but we'll see what happens later on in the week. As ever, in the middle of the week, there's usually news, and the volatility and the momentum in the market kicks in, and then we see some possible scenarios for entering. So, hope that helps you. Thank you very much for another week, for being here with me. My name is Dima. Hope you enjoyed this video. Hope it's useful to you. If you have any questions, then post down below and click like and subscribe. to the channel. As always, we're delivering videos for you every week, and every week you'll have some analysis and ideas in the market for what to trade. Pointing out some high probability scenarios this week, but at the same time, do bear in mind we've got news on the dollar, news on the pound, and we have several dollar-based pairs here, and including oil, including gold. We've also got 2 pound pairs and euro, of course, there's a dollar, S&P in the stock market. So again, I'm always reminding you of these little disclaimers to bring your awareness, to remind you that in order to be a good trader, it's about consistency and risk management. So do manage your risk and pay attention to the pairs you're trading, and not only your risk, but also the quality of your setups. All right. See you next week. Thank you for joining me, and good luck in your trading for this week. Bye for now.